Hello, chart watchers, and welcome to this Thursday, October 11th Market Watchers live show with your hosts, Tom Boley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, the market is under pressure once again, although we are off our lows. Currently, the Dow Jones Industrial Average down 147 points, the S&P 500 down another 20, the NASDAQ down 13 points, and it is above its open, which is good news. At least for now. Russell 2000 down about 4.5 points. 10-year Treasury yield backing off. Recently it was up 3.25%. Currently it's down 6 basis points today to 3.16%. Volatility index all over the place. Was up over 24 earlier. Was down in the 20s earlier. Currently it is almost flat at about 22.5. Energy taking on the chin. Just 2 days ago trying to make a big breakout above 78. That failed, and we have been going down since. Financials under pressure. The 10-year Treasury yield pulling back. Really didn't see a whole lot of movement to the upside in financials, even when we got that breakout in the 10-year Treasury yield. And now with the pulling back, you can see financials moving to a couple-month low. The healthcare group, which was clearly one of the leaders heading into October, we have begun to see some selling in that space as well. Technology holding up among the best today. It is up slightly, but it comes on the heels of some pretty significant selling. Communication services, same thing, big selling recently, trying to hold its own today, but still obviously a pretty big underperformer of late. And then finally, Fluor Corp, FLR, came out with a revenue warning this morning, and that's the last thing you want in a market that's as volatile as this one, is some fundamentally bad news. And you can see Fluor down $9 today from a 56 and change close yesterday, all the way down now to 47.11, and not looking good for that space as well. We'll talk about that in a bit. But first, let me bring in my co-host, Erin. Well, Erin, I've got two hurricanes hitting me simultaneously right now. I've got Hurricane Mike coming up from Florida, and I've also got this hurricane here in the market. Hopefully things are a little better out your way.
I know. Well, as far as the market goes, unfortunately, we get to share that one. But yeah, weather, of course, here, it's California. I mean, I give you guys the weather every morning for me. And let's face it, it's almost the same. I think our weathermen really get paid too much out here because we'd never have a change.
That would be difficult. Okay, it's going to be sunny and warm again today.
Exactly. And yes, we have partly cloudy right now, but it should be full sun.
We're hitting almost all seasons today. We got Bill Shelby in the house, and Bill, I understand you've got some snow out there in the mountains near Seattle. What's going on?
Yeah, it's starting to really high elevations are starting to get snow already up, 4,000 or 5,000 feet or so.
Yeah, well, what do you think of this market? I mean, this has been pretty brutal here over the past week, or maybe even 2 weeks, some areas of the market, or actually go back about 6 weeks for the small caps.
Oh, no, I was looking at the NASDAQ, and I think we've erased gains that if you were basically down to, I think, about the level we were in May. So we've erased 5 months of gains in 5 days, roughly. I'll have to go back and double check that, but I think that's what I was looking at this morning. So that's pretty vertical.
Yeah, I haven't looked at it, but I'm going to take your word for it because I've seen what's happened the last 5 days, and it's that sounds about right to me.
Mm-hmm.
I always make the comment, when we get into these sell-offs and the volatility gets up, into the upper teens or into the 20s, I just say market makers go on vacation because, when the volume picks up and we get this huge volatility, it seems like they're almost like matadors, just letting prices go lower because it's their responsibility to be on the other side of the trade when there are imbalances. But I mean, you can't really blame them. I mean, you don't have enough capital really to try and support the market when everything is selling off the way it has the past few days. But we'll get into that. I know, Bill, you've got a presentation for everybody as we go into October. We've got Halloween coming up, a little trick or treat. So I'm not going to steal your thunder, but if you can hang in there with us about 15, that would be great. All right, Erin, why don't we go ahead and get this thing started?
Let's go right ahead. Okay. Well, let's see what we have coming up. We have a great schedule coming up. Of course, Mary Ellen will be with us tomorrow. I'm going to do my workshop on big picture indicators. And the following day, mark the calendar, Martin Pring is going to be with us, followed by Julius de Kempenaar on Thursday. So excellent week ahead. Very excited to see Martin Pring. Well, hear him, I guess. All right, scan engine trick or treat. Bill Shelby from the mothership in Seattle is going to give us that brief. 10 and 10, our first symbol is going to be First Data Corp, FDC. And we will finish up with chart breakouts. And yes, believe it or not, there are some stocks having some breakouts today, and we're going to go ahead and look at those later. But let's go ahead and get started on that technical headlines and news. I know we had some interesting economic reports.
Yeah, we did have economic reports out this morning. Of course, yesterday we had the PPI. Today we're getting the CPI. September CPI came in pretty tame, rising 0.1% versus the anticipated 0.2%. And those same numbers apply to the core CPI. Again, rising 0.1% versus the 0.2 expected. Initial jobless claims still very low, but did come in a little hotter than expected, or a little higher than expected, 214,000 versus the 207,000 that was expected. And as a result, we have the 10-year Treasury yield backing off. What I find really interesting, though, when I look at this, and let me just make sure I've got an update here on the right where we are. Yeah, we're bounced a little bit off the low. But what I find really interesting is that when we were breaking out on the 10-year Treasury yield, when we went up to 325, many of the stories where folks are trying to figure out what's going on with the stock market, we're saying, well, the higher interest rates are driving down equity prices. And yet we've come back now 10 basis points or close to that off the high, and the market is still selling off. In fact, yesterday it picked up steam and was the worst day that we've seen throughout this downtrend. And yet I didn't see anyone coming out and talking about how higher interest rates were the cause, because rates have been coming back down. So I don't pay much attention to what's going on with the talking heads. Excuse me. I think these hurricanes have me all choked up. But what I do pay attention to when I look at the market is that volatility index. And when the market gets fearful, we start seeing support levels lost without even a response. And that weakness to the downside just continues. So I think we have to be really careful. I try not to trade a high volatile market or a highly volatile market. I think that it's very dangerous. I know there are a lot of traders out there that love this volatility and love the big swings in the market. I think that they are very dangerous. And if you're on the long side and you've tried to catch some of these falling knives the last couple of days, you know what I mean? Because it seems like just when you get to one support, it breaks down and you're heading for the next support. And it's happening in hours, not days. So it does get a little scary, no doubt about it. And we want to keep an eye on that VIX and see if we can get a reversal. I thought we might be reversing under that 20 level, but instead we powered through it yesterday. We were up 43% on the VIX yesterday, and that led to that panic sell-off that we saw in the last 2 or 3 hours yesterday afternoon. Let's take a look at some of the areas of the market. Remember yesterday I was talking about how the 60-minute positive divergences were in play, but you need to see reversals. Let's take a look at some of these. Here was the breakdown in the Dow early yesterday. When we first broke down, we clearly had a higher PPO on the hourly chart, but look at what happened, and look at what happened to the PPO. There's no positive divergence here. And that's one of the things you got to be careful about when you're looking at these momentum oscillators, is not being premature. When you first see a positive or a negative divergence, that many times can be erased and eliminated. Let's take a look at the S&P. Same thing. Early yesterday, we break down, lower prices, higher PPO, and then we keep going lower. Positive divergence eliminated. NASDAQ. Same thing. Positive divergence, lower PPO, keep going down. And then finally on the Russell 2000 small cap, this one looked the best of all of them. I mean, we had a positive divergence until the middle of the day. And then you can see the selling that took place in the latter part of the day and a big move lower here. So there are no positive divergences on our major indices on the 60-minute charts at this point. And so that tells me that when we bounce, we want to watch these falling 20-hour moving averages. You can see the Russell, each time we've gotten up to this level in October, we have started another push to the downside. And each time we've gone to new lows, we've also gone to new lows on the PPO. So right now, yes, short term, we could get a bounce at any point. 30-point bounce up to test that 20-hour moving average is a possibility, but I'd be careful. All right, let's take a look at energy. Remember energy looking so good just a couple days ago, trying to break out above 78. That failure, we always have to pay attention to these tails. When you get a false breakout like this above a key resistance level, especially one from several months ago when we're sideways consolidating, a lot of times those false breakouts can be trouble. When we go over chart breakouts later in the show, I'll show you some examples of individual stocks where you got to be really careful where you're making breakouts and then you fail into the close. But here the XLE failed. We went back down. We're now moving closer to the lower end of the range. If this seems somewhat familiar, how about the semiconductors? Remember, semiconductors here on these tops trying to get breakouts through this gap resistance. And each time you can see that one, the last attempt with that long tail to the top side and then back down. And now we've got the breakdown to the downside. So always pay attention when you've got key resistance with multiple tests. You get a false breakout, leave a tail to the top. Many times, I mean, I don't know that it's going to necessarily signal a breakdown, but I would be looking for a short-term reversal. We got that with semiconductors. We're getting it right now with the XLE, and certainly worth keeping an eye on to see whether or not energy can hold on to support. A couple of individual stocks that are in the news. Square. Square is squarely in the middle of the news today. Chief Financial Officer Sarah Fryer leaving to become CEO of Nextdoor. Stock is getting hit very hard today, but I would say this. I mean, there's obviously a lot of panic going on in the market overall. We're seeing a lot of companies like Square that were leading the market that have completely turned around here in just the first 10, 11 days of October. But the thing that gets me is the stock after opening with the news. The news came out yesterday after the close. So with the news, the stock opens at 72. And within an hour, hour and a half later, it hits 65. That's not rational thinking. That's irrational behavior, which is typical during high volatility periods like we're experiencing right now. So the last thing you want to do in a market like this is come out with bad fundamental news. The market does not handle it well. Many times when the VIX is down around 10 or 11 and the market has bad news and yet we still go higher, it's like the market is shrugging its shoulder. That's what happens in a low volatility environment. In a high volatility environment, we do not want to see bad news. And you can see what happens with Square. I actually think Square is going to be fine. It's probably going to catch a bottom. I don't know if it's today or if you go back a little ways, but this is really the first time. If we can close back up over the 20-week moving average by Friday, which is tomorrow, 20-week moving average, 75.5. Well, I mean, we were above that yesterday at the close. So a quick reversal on Square could simply put in a long tail below this 20-week moving average. We saw this back at the end of April, by the way, where intra-week we were going below the 20-week. We saw it also back in early February, and then we recovered and held it. So I'm not ready to give up on Square just yet, but clearly the short term is very dicey. Fleur, talking about bad news. Mentioned this one at the top of the show. This is in the heavy construction area. Fluor Corp, FLR, down almost 16% today. They pre-announced revenues below consensus. Again, the stock actually had been holding up fairly well earlier in October, did pull back. And of course, yesterday had a rough day with most everything else in the market. But this warning, market doesn't handle the bad news very well with the high VIX. And you can see the huge drop. If we look at it on a relative basis, you can see that Fleur actually was holding up pretty well relative to its highs back earlier in the year, even though the overall index was quite a bit lower. And that actually helped outside of this one huge gap down where we saw the relative strength dip. We had been rising, but this is going to be the second major disappointment here for Fleur in just the last 5 or 6 months. And you can see that relative strength taking a toll as a result. So you look down, you see Fleur now relative to the S&P getting close to its annual low. And the group, the heavy construction group, has broken now to a new relative low versus the S&P 500. That is not good. You see other stocks in the group that have held up a little bit better, but they also had higher scooter rank. You look at Jacobs Engineering, for instance, JEC. Stock actually down quite a bit earlier, but it has bounced back, getting close to the upper end of its range. And look at this breaking out above those prior highs that we saw earlier in 2018 look at the relative strength on JEC versus its peers versus the S&P 500, while its industry group continues to move lower. So I think we got a much better chart here than what we have on FLR. And then the last stock I just wanted to mention, Facebook. Talked about Facebook quite a bit of late. Said I thought it was going down to 150. We have now hit that 150 level. Major support area on Facebook on a longer term weekly chart. I still see a head and shoulder here. I think we could bounce from this level on Facebook, maybe back to that 20-week moving average. But I believe we're going to see, maybe with the next earnings report, a big move down. Erin, I know you got a few upgrades, downgrades. What you got today?
All right, let's take a look. I do have 1 upgrade and 4 downgrades for you today. Let's go ahead and get started on those. So our first one, let's see, this one is the only upgrade that we have. And it's, of course, Lumentum Holdings, which is what I have up. JP Morgan upgraded it from a neutral to an overweight. And you know what, the one thing that I noticed right off was this, of course, rising bottoms trend line, got the nice bounce off of that. Getting ready to hit 20-day EMA overhead resistance. You know, it hasn't really, it's held up since the beginning of September, that 20-day EMA as far as resistance. But I think on the upgrade, probably have a pretty good chance of seeing that broken. I'd like to see that up there for a little bit, at least close above that 20-day EMA. That would give me a bit more confidence. But you can see the PMO is flattened. It's getting ready to turn up. So interesting looking upgrade. Delphi Technologies, Goldman downgraded this one from a buy to a neutral. So now we're looking at all the downgrades. You know, when you look at this chart, and it is, you know, it's a new one. It only started trading back in late November, and all it's done really since, well, late June is continued to fall. And now it's been downgraded. You know, it's new enough that the PMO is all the way down to -10. I don't really have a quote unquote normal range here, but on the downgrade, I would, you know, this is really pretty ugly, and I don't suspect we've got a bottom. It could be a while, so I don't think I would be trying to bottom feed on that one. Big time breakdown on Huntington Ingalls Industries. This one was downgraded by Goldman from a neutral to a sell. Investors already skittish, have now a gap down after a very large drop that we saw yesterday. And, you know, free falling lower. Where is the next area of support? It would probably be right here at about 225, where you can see these tops back from May and June. So that would be where I'd be looking for the first possible stop, where you could see a bounce. But let's look at this PMO. It's overbought. It's, you know, been flat. Now, of course, with the big decline, it's dropping like a rock. You know, we'd want to see this one. You'd want to see the PMO decelerate at least by the time we start hitting this area at 225. Watch for that PMO. If it starts to turn around, that could be an interesting area. U.S. Silica Holdings, Morgan Stanley downgraded this one from equal weight to underweight. And you can see we have had a bad day. I mean, not saying it's a good one, but it looks like we may have found that support area right there at the previous low from September. We do have a top on the PMO below the 0 line. You have a stock that's been, you know, in quite a downtrend for quite some time. I think you could consider it for bottom feeding, but I'd want to see that PMO at least turn up and start moving a little bit higher. Valero Energy was also downgraded today from Tudor Pickering. They downgraded it from a buy to a hold. You can see, like we were looking at on Silica, we have support being hit from back in September. We don't know if it's going to hold, obviously, because we're still trading today. But notice the PMO whipsawed back into a sell signal, and it's now just entering negative territory. So that tells me I wouldn't be expecting this area of support to hold. I mean, I think if you could get it to hold here about at that low we saw back in July, but, you know, the close back here is more at that 105 level. for a possible area of support, but I would be looking down here more likely to that 100 area. It sort of lines up in a support zone with this low and this high. All right, and that concludes our upgrades and downgrades. It is time to bring back Bill Shelby. Looking forward to hearing about the scan engine, and everybody go ahead and take that poll that is there right now. We'll be looking at that to see what you think of the scan engine.
Great, thanks. Yes, we've got what I'm calling the scan engine trick or treat. We've got a bunch of new functions, 6 or 7 of them here, and I'm just going to go through them all. Been kind of working on this on the sidelines. Actually, I was working on this a lot while certain people were on a cruise in Alaska and the office was empty. So I finally got some time to concentrate on this. So we've got a couple of new functions here. Count up, count down. We've got streak up, streak down. Correlation, which is everybody's probably familiar with, and percent relative. So let's go ahead and dive right in. We're going to get from our landing page here, our dashboard, we're going to go over to the advanced scan workbench. And I'm going to try and limit these to a small group. So I'm just going to run everything against the small caps. Our group is SP 600 here. We'll get this a little bit bigger. See if people can see it a bit better. All right, so let's see. We've got all of our new functions are down here under these technical indicators. Scroll down here. We're going to go first look at our count groups. Do count up. And what this says is basically over 20 periods, we're going to take a look at the close. We're going to find out how many times in that 20 periods, in this case days, the number of up days was more than 10. Actually, what we'll do is let's just see if we can filter out a few more and see if we can find any over maybe 13. So we can take a look at these groups. And we'll say over this window, we can maybe go here to a 1 month chart. We basically calculated these 20 days and we've seen how many times we had up bars versus down. So we've gone back here and we found that over the 20 days, we've got more than 13 bars. So we can actually go here. We can also do our rank by feature to get the actual number if we'd like. Oops, come on, fingers. So we can actually get the count of exactly how many days within that 20-day have been up days. And then, of course, our alternate version is the down version. If we change this here, we want to change it here so we're not looking at different numbers. Here you can see how bad of a market it is because I think what we had 4 or 5 on the other for 13 up, we've got 90 of the S&P 600 have more than 13 down days. We've got a lot. I mean, there's just some really ugly charts out there. So this is a really good feature for detecting trends. That's what I've been starting to use it for. So if you want to find something that is over a certain time period, like we're doing 20 here, which is roughly a month, we're saying find me something that for the most part is up 50, 60, 75% of the time over the past month. So it's really good at setting sort of a trend. If you're up 16 times in a month, it's probably it's probably likely that you're on a general uptrend. You could be going sideways and maybe it's very small increases, but over the long haul, you would expect to see trends being set the longer you increase this window. Of course, if you've got a very short term, 3 or 4 days, you're going to find a lot of whipsawing. But if you get out to 2 weeks, 3 weeks, 4 weeks, you can find some decent trends using these counts going up or down. So we'll get that. Now we're going to go look at our next one. Streak up is basically just to take the close. In this case, we can change this to whatever we want. And it's just how many consecutive days up or days down. So this is like if you look at the baseball standings, you'll see the win streak, lose streak. This just tells you how many days in a row something is going up or down. We'll see if we have any. Oh, we've got only one. So there's only one S&P small cap that's been up for 5 days. I bet if we do down, we're going to get a whole bunch. Yeah, 42. So this is a way to find maybe short-term findings. This is obviously something that a streak is not generally going to last. You're going to probably get a fair number that'll hit 4 or 5, but you're not going to get many that are going to hit 10 or 15. And we know that's a pretty rare thing to go up or down more than 5 or 10 times in a row. And probably if you're getting that many, it's more likely you're going to find a higher count on the downside, like you see today, where there's just a general selling of everything. You're going to get a lot of down streaks of 10 or 15 days up in a row. We all have an inherent feeling that that's not a very common thing. So if you're looking for a very short-term sort of move, you can use these streaks. You can also change this, like I said, to RSI 14. We can just pick anything we want there. We can do Bollinger Bands, pretty much anything. Our rank buy-in again, just to see, get some numbers there. So we can change anything there. We could do the same thing with the close up and close down. We can change that close value to a RSI or a Bollinger Band or a MACD or whatever. So that's the streak is better for, like, say, the short term. If you're looking for a short term swing, this is a new great way to find those. Move on next to our correlation, and everybody's pretty familiar with the correlation. This is very similar to the Workbench. We've got our time period for which we're doing the correlation, and then we've got our symbol which we're doing the correlation against. We can take this. We've got our correlations there. Again, correlation is great for finding diversity. It's a tool you can use to say, well, I don't want to have all my eggs in one basket, so I don't want to own all large caps which perform similarly. So if you're trying to diversify, you may want to have, obviously, try and find something that's going up in this market. Although, as Tom mentioned, even yesterday, items which you think you might would have gone up, some of the bonds and whatnot with interest rates, also got killed. So sometimes it's pretty difficult to find some diversity in some of these extreme panic markets. But in general, if you're looking for diversity, you can now scan for correlation and try and find something that's negative. So if we wanted to find something that was maybe over a longer period of time, so maybe we'll go out to 7 or 8 months here, a couple hundred days, and we're going to go say maybe less than 0. We'll try and find things that are going against the S&P. And these, as you would expect, you're going to find probably a lot of bond funds. Go reverse the sorting, and you'll find certain items that are against the S&P. So if you're looking to sort of diversify and you want to find some larger trends, I would expect some of these we can eventually find some. I'm looking at small caps, but if you want to look for ETFs, you can find ETFs that are sort of more broad that will allow you to set up a portfolio that has a little bit more diversity. We could actually change this to ETF No UI, which is the ETF group without the juiced ones, without the inverses and the doubles and triples and all those. So we can come out here, reverse, and find our lowest correlation. So these are the items that would be pretty much against the S&P 500. So the S&P 500 goes up, these are going to be going down. Obviously now we're seeing a lot of VIX, given how crazy it's been the last few days. But in general, you can start to find things what you would expect: gold, agriculture, commodities, whatnot. So the correlation is a great way to go track down alternate items that you try and diversify out of a portfolio. And if we go to our dashboard, and we've got our correlation view within some of our lists here. So we'll just look up some industries. You can use this same view within the favorites to do the same thing. You can choose your time period and against your signal. So this will be sort of an alternate way to view it, but now we've got the ability to scan for it and go proactively find items that you're interested in looking at. And we'll get back here. We'll do our SP. And the final one, and this is a really powerful one. This is one that I really liked getting done. I've been looking at trying to do this for quite a while. It's percent relative, where we were up near percent. All right, this is, again, similar sort of syntax as we've got on some of our other ones here. We've got a time period, and then we've got a symbol. So many of you are probably familiar with percent change, which allows you to figure out the percentage change of an item over time. Percent relative allows you to get the relative performance over time. So I know we've talked about doing scans where you say, well, I want to find everything that outperforms the S&P. So the old version, we had to go maybe to a perf chart. We had to put the S&P 500 up. We had to go out to our time frame to make sure we were doing apples to apples. We had to say, okay, the S&P 500 is, we'll be optimistic, say it was up 3% over a month. And then we would have to take that number. We'd have to come back into the scan engine. We'd have to do percent difference is above that number. We'd have to manually insert the number. It was sort of tedious. It took 4 or 5 steps to actually get there. Now we can do it in one shot. So we can do this very quickly and just say, show me everything in the S&P 600 that over the last 20 days, roughly a month, has outperformed the S&P 500. So for me, that's a huge thing, because obviously we're looking for outperformance. The old version was rather tedious. This is a very quick way to go find outperformance. And of course, you can change the number. So this is basic outperformance. It's just anything better than the S&P, but we can find anything that's better than 10%. So it's something that's really doing well relative to the S&P. So we can do that. Another item in here, if, let's see, we get back to our scan. Those of you who are familiar with the Workbench, one of the features we put in a few years ago is the ability, when we're doing some of these relative performances, obviously you want to know the relative performance of, say, a sector in an industry. So you can also do that here. You can say sector. Percent relative will go out and find the sector that the particular item is in, if we've got a sector, and we will map it against that. So if we know we're looking at, say, Apple, we'll go out and say, okay, well, we know Apple's sector is the XLK, so we'll use the XLK ETF. So now we can find everything that's outperforming its sector by 10%. Again, fairly small list there within the S&P 600 at this point.
Yeah, and then you could also, I guess, once you find that, it lists all the stocks, but then you could sort it by, say, sector, and go straight to that particular sector maybe that you're looking at. For instance, if you're thinking, industrials is an area that you really want to consider, I think running that and then sorting, yeah, right there. And then you could scroll down to find whatever sector it is that you're looking for, and you can see, okay, here are the 2 industrial stocks. Looks like KLXE and TISI. These would be the 2 that kind of fit that relative outperformance scan that you just set up. And then you could quickly bring up those charts to take a look.
Right. And another thing this will show you is we can see here, we're all talking about relative outperformance. Where are they clustered? Over the last month, I mean, obviously we haven't had a good couple of days on energy, but over the last month, it seems to be telling us that a lot of energy has been starting to outperform. So there's a niche area that you can go look there. We've got a little bit of relative performance here in the cyclicals as well.
And looking down toward the bottom, I see 2 technology stocks. I mean, imagine, if you had run this 2 weeks ago or 3 weeks ago, I'm sure you'd have a lot more technology stocks than you have now.
Right. And so if we can go back, and of course, I've sort of let the cat out of the bag. You can do industry as well. So now you can scan against its industry. Again, oil and equipment and services is a pretty common. So that tells you that there's some interesting thing going on there. We've got some retailers and chemicals here. So that's another way to find relative performance. But one of the things that I've done for years and I like to try and do is combine these.
And what's the time frame again here? Is it
20 days in this case? This is daily, so this is 20 periods. If you can the scan engine will do weekly or monthly, so you can change that out to, but most of the time people use daily for the scan engine. So this one, what this is going to do, this is where I try to really whittle down my results. So this is going to show me anything that's outperforming the S&P 500 by 2%, anything that's outperforming its sector by 2%, and anything that's outperforming its industry. So when I was working with Gaddis, we were teaching classes. One of the things we're always looking for is something that's outperforming the index, something that's outperforming its sector, and something outperforming its industry. So if you can get all of those, you're really starting to find things that are showing the most relative strength. So that whittles it down to a fair number, but you can assume that these items, although there's a fair number of them right now in the S&P 600, are the stronger ones within the S&P 600.
Can you pull up like that first one there, Bill? It was ACOR. The reason I say that, it's got a scooter of 8, and I'm just wondering how it fits.
A lot of times, though, you know, the performance of the relative performance of the sector, I mean, if the sector is going down, it can still be improving over the sector over the space of a month.
And it's looking over the last 20 days, too. So it's looking over the last month where it's basically been flat.
Yeah.
So if we stretch that out to, say, 50 days, I imagine that one would be gone. Okay, that was just when I first saw that, and I saw a scooter of 8, and all of a sudden it's outperforming everything. I just that was just a question that just hit.
Yeah, and the scooters are an interesting thing because, you know, it is performance within the universe. Right. So scooter is sort of obviously I'm doing a scan of the S&P 600, so the scooter would be a little bit more relevant, showing a small cap scooter, but sometimes the scooter can be a little misleading when you look at the bigger picture, and then the scooter is sort of a smaller picture.
Mm-hmm. Yeah, just to kind of expand on that, and you can correct me if I'm wrong, but let's say, I mean, looking back, say in the month of September, small caps got hammered while the S&P 500 did much better on a relative basis. So if we were comparing to the S&P 500 and you looked at small caps, you know, you might see a small cap that's got a pretty decent scooter rank, but it may have underperformed by a wide margin. I mean, I'm kind of flipping it a little bit, but
absolutely, that's one of the things what you really have to know with the scooters is they're separate universes, and a number one doesn't necessarily have any correlation, as it were, to anything in another. Because, like you say, the small caps, if they're getting crushed, the best small cap, which you could have the 100 level scooter, still might be performing worse than the middle of the S&P 500 if small caps are just getting dumped.
Right.
So it does have some tricky sorts of behavior. Sometimes you kind of have to be aware of the way the scooter functions.
Yeah, you just did a lot better than I did.
So this is a way I've switched to large caps now and looking for outperformance. And again, we're not ranking by any of these performance, so we don't know exactly which ones are the best. We can go over and try and rank by one of these and see which one is the best. So over the last 50 days, AMD had done well, although recently it's gotten pretty slammed.
Yeah.
But you are looking at over the space of the space we had up to about 3 months is what I had that scan as. It had done exceedingly well up to that point in time. So this is what I have sort of tried to use in my own scans. While I've kind of had this sort of half written for a few months, been playing with test versions of it, and it definitely narrows down the scope of what the scan results are, and especially if you're just looking for outperformance. And you can probably put in some additional parameters on top of this if you want to try to narrow that. You can use the scooters or other, for whatever, some of your variations of uptrends and crossing above averages and highs and that sort of thing. But it is an interesting thing to be able to have the scan engine go and figure out what all of its corresponding sectors and industries are and sort through all that stuff and just give you a list. It's much easier than our old versions. I remember Erin and I talking about how to do this. There was no easy way to do the outperforming. You had to just go through that slow methodology of going and finding out what the S&P did over a time frame, coming back here, plugging all the numbers in, and then and doing it from scratch. And this is going to be a lot easier for people.
I would say so. Hey, I got a question for you from the chat room. Is
Mhm.
there going to be any new chart school articles on these new features?
Yes, and in theory, we are updating those. I just pushed these changes out to the scan engine this morning before the market opened. And so we are in the process of getting those ready and pushed out. These will also be in the alert engine. I will be working on getting those into the alert engine hopefully by the end of tomorrow, but if not, probably Monday. So as soon as you see them show up in the alert engine, you'll also be able to scan and set alerts on these as well. So those will all be wrapped up hopefully by the end of the week.
Excellent.
Question, Bill.
Sure. Yes.
If I'm not looking for individual stocks and I'm just looking for, say, the industry groups that are outperforming the S&P 500, can I set up a scan here where, you know, I don't know how many industry groups are, 125, maybe 140, I don't know. But is there a way to just quickly run a scan to show which industry groups are outperforming the S&P 500 by a certain percentage over a time frame?
Well, let's see here. Let's see. This is where I ad lib.
Okay, that's fine.
Okay. I think the way you'd have to do it, and it's sort of a hack, is we, again, going to that notion of,
I mean, I use my relative charts. So I always use those relative price charts, and I have them set up in chart lists where my industry group is relative to the S&P 500, and I've got it short term and long term. But I physically have to go back and look at it. I'm just wondering if I said, okay, over the last 6 months, which industry group has outperformed by more than, say, 10% or 15%?
so this might be close what I'm done. And this, again, there's a couple of holes in this, as you pointed out before. Symbols start with $DJUS because there is that, clean energy
Right.
that falls outside of that. But in general, we can do the DJS. So we can limit our universe of the scans to only looking at the DJUS. And then we will try and find those relative to the S&P. So
Okay.
I'm not going to promise this is exactly what you want, but
It looks pretty good.
if you follow these pretty closely, I would maybe suggest this as a starting point.
Yeah, I follow these very closely, and I would say those are the groups that I would have expected to have come up. I know restaurants and bars have started picking things up lately. Yeah, there's your drug retailers. I wrote about those in my blog article recently. Yeah, I mean, I think that list is, I think that works. Saving me some time here.
I'm trying. Yep. Let's see here if we get.
I'd like to put a check in the mail to you, but I'd rather actually send you Hurricane.
Yeah, these are the prices. Of course, we'd have to do a percentage graph here and sort of graph them on a percentage basis, but that should be as pretty close.
All right. Yeah, that makes sense.
And you can do the same thing. It's a little bit harder to do the sectors. You could just do starts with XL, although even that with our new sectors starts with X. Those are disappearing as well. So there's probably easier to do with the industries than the sectors.
Okay, cool. Any other questions in the room, Erin?
Nope, that pretty much was it that I'm seeing right now. A lot of people are asking, about graphical user interfaces. I know it's sort of tough for some people to look at it as, actual language, computer language, but really, I think that is really the best way you're going to be able to write these out. It tells the people exactly what is happening in the scan engine. I've told people that they should get those narrowing down, to do the general ones first, and then move down to as far as when you write your scan.
Mm-hmm.
Start off with, okay, it's a stock in the U.S. Don't go right into, oh, the 20-day EMA is greater than the 50-day, because that's the first thing, right? The scan engine looks at, and might take them a while.
That's true. And it's easier to sort of, when you're first starting with a scan, especially if you're just learning it, it's easier to sort of build it slowly and just sort of see, okay, I did this. Now, what did it do? And then take another step and see what it did, and just sort of get a feel for how you can narrow things down. Sometimes people just start throwing the kitchen sink and it gets so complicated that you can't really tell what any particular how any particular clause is affecting your results. So it's better to sort of start broad and sort of start to narrow things down.
Mm-hmm.
Cool. All right. Well, I know we had a poll. So why don't we bring our poll up? We can chat about that for a second or two. And the question, and I tell you, if anyone, I don't know who the 18% is that's saying never. Maybe they're not members, but I can't imagine not using the scan engine.
It has to be one of my favorite tools, really.
It's, I mean, it's apart from the actual charting Workbench, I think it's probably the most valuable single feature on the site. I mean, obviously I work with it quite a bit, but I work with a lot of the things on the site. So, but this is the most powerful in terms of just being able to weed through thousands of items and spin it infinite number of directions and ways and be able to get a small actionable list of stuff to look at every day.
Yeah,
or every week.
Yeah, I always say my two favorite things at StockCharts, and I mean, I have a bunch of them, but two certainly toward the top would be being able to keep chart lists and then using the scan engine and being able to scan against my chart lists. It's critical for me as well.
Yes, absolutely. And I know when I was interviewed before ChartCon, we were all asked, what is your favorite feature? And it took me less than a second to say the scan engine, scanning, because, for me, with Decision Point, it used to be, scanning a spreadsheet manually, of all the S&P 500 stocks, looking at the column that tells me, oh, the PMO has been rising 3 days. There's a little R3 in the spreadsheet. So I certainly appreciate it, all the work you do with that.
Thanks.
The other thing I would just say too is for those of you who don't know how to create these scans, and it is, it's a different language. You got to get used to it for sure. There are shortcuts, and of course, Bill, we have that the predefined scans.
Yes.
That, where you can go in and they've already been set up for you, and you can kind of get a feel. And actually, maybe it'll be a good time. I'm going to go ahead and just grab the screen, and you can add anything you'd like to it.
Sure.
Bill, as we go through, or Erin.
Mm-hmm.
But here on that members dashboard, when you go down toward the bottom, you have your scans where you can run scans and save them. But then you also have this predefined scans down here. And when you go in and click on something, for instance, of course, we're not going to have too many of these new 52-week highs. But if you click on it and then bring those up, you can actually go to the upper right-hand side and see the language that is used in order to come up with this. So this is one way to just take some extra time and kind of get used to how the language is written so that you can then begin to use, I mean, there's a lot of articles and so forth on the site as well, in Chart School and so forth. But this is one way that I sometimes will take a look, and occasionally I'll just modify one of these existing predefined scans if it's something that I really like and just want to add something to it. For instance, I don't know, I might pull up bearish MACD crossovers and then go in here, click to edit, and then simply go down into one of these components and then just add something to it and run your scan. So you can add something to the information that's already here.
Yeah, that's a great way to do it. And that's one of the reasons we put that link up there a while back. It was probably a few years ago we put that link to allow you to be able to see what's there. It's a great way to start learning. And as you mentioned, Chart School's got great articles. It's got examples. There's videos, all sorts of things. But it does take a little bit of time. There's a bit of a learning curve. But I think if people sort of stick with it, it's an extremely valuable tool.
It's definitely worth the time investment. I mean, what you were just showing me a minute ago, just how to highlight the industries that are outperforming the S&P 500. I mean, having that knowledge, I know you have obviously more knowledge than anyone else in this area, but being able to take that knowledge and gain more and be able to look in and find things quickly. I mean, that was a very quick scan that you put together to find, what was it, 10 or 12 industry groups that are outperforming by 5%.
Yeah, that's one of my goals here with Chip, is to sort of speed up the workflow, because I'm one of these people, I don't have a lot of time to do a lot of research. So anything I can do to speed things up is extremely valuable to me, and I'm assuming everybody else as well.
Awesome. Did you have anything else to share with us today?
Nope, that's it. It was sort of a, like I say, it's a little trick or treat grab bag. Some of those will be useful for some, and some will sort of ignore them and maybe choose a different one. But I think I was gonna say the percent relative. That's like the full size Snicker bar in the trick or treat bag.
Yeah, I would just encourage anyone out there who was watching today and was intrigued by what you went over and maybe didn't understand it, to go back and watch the recording. We have them on YouTube, and go back and just go through what Bill explained earlier, because it'll save you a lot of time. And for me, uncovering, I mean, how many stocks are out there, Bill? I know thousands.
The scan engines, 24,000, 25,000.
Yeah, imagine going through that many charts. It's impossible. I mean, I can go through charts pretty fast, but 24,000 is daunting number. And literally, you set up a scan, push a button, and in a second, a nanosecond, you've got the charts coming up that meet your criteria. So scan engine is very important. I think you hit the nail on the head here, and really appreciate you coming by and sharing your knowledge with everyone.
Sure. Always great to come by.
All right. Appreciate it, Bill. And I guess in the theme of that trick or treat, have a nice Halloween coming up the end of the month.
Yeah.
All right, Erin, it is time. Speaking of trick or treat, it's 10 and 10.
Yes. Let's see if we have any treats, or are they all tricks? All right, here is the RRG I've put together. We didn't have that many requests today. Lots of people listening to Bill. So there's a good chance you're going to see yours. I wanted to point out which sectors. Notice technology is a lot of interest there. So we'll be looking at a few of those, I am sure. But let's go ahead and get started with our first one, First Data Corp, FDC.
Okay, well, I didn't annotate this one yet, so let's take a look at it. I will say, first of all, First Data is in that financial administration space, the DJUSFA. So many of the stocks, we've already seen PayPal getting hit hard. Square came out today. Well, I guess actually yesterday after the close, announcing its CFO was leaving. So we're seeing a lot of selling in this group. I think overall, considering how bad the market has been, First Data hasn't been horrible. It's actually started to rebound against its group. It is still downtrending relative to the S&P 500, but overall, I think you've still got an uptrend here. So I think the key is going to be whether or not the group holds on to its recent relative support versus the S&P 500. So that would be something I'm going to watch. So in annotating this relative chart, I would be drawing a line on this relative support level here at about 0.164, something like that, because we have been underperforming. The group's been underperforming, but if it holds that relative support and begins to outperform, then I think you have one of the better stocks in the group. The problem now, though, technically, is we've got some issues. So the other thing that I would be watching closely is whether or not, or when, we can get back through this 20-day moving average, which has now dropped below the 50. We haven't seen this configuration in quite some time, but it would certainly be nice if we could get back above the 20, get that 20 moving back above the 50. So in the short term, if I owned it, I'd be a little careful, I think, when I got up close to $24, if it gets that bounce, because that is starting to show some pretty decent resistance on these bounces.
All right, and the most popular request in the chat room is AT&T.
Yeah, AT&T. I know Verizon just recently had a breakout, and AT&T had been doing much better. Of course, it is starting to get caught up in some of the selling as well. But here, on a relative basis, you can see that it had actually been moving up slowly, stair-stepping. It's pretty much the industry group, so that's why you see not a whole lot of movement here. But I would be watching, looking for a reversal here, because I do think that key support is around 32.50, and if you lose the 50-day moving average in addition to that price support, I'd be a little nervous. Here was the last high. We broke out above it. You can see the volume did start to pick up as we got through, and now all of a sudden we're coming back down and not only testing this level, but moving a little below it, trying to hold the 50-day moving average. I would probably have a pretty tight stop. I think there's also maybe a trend line here that we could show. And I think if you lose the 50-day moving average, you're also losing that trend line off the recent lows. So there are a number of reasons why I think AT&T should turn in this 32.25 to 32.50 area. So I might keep a closing stop around 32 bucks.
All righty. The next one I have for you is FedEx, FDX.
Right, FDX. Okay, well, we lost that price support yesterday on the close. That is bothersome. I'm going to stretch this out, though, and just see on a longer term yearly chart. Yeah, that was a pretty big level. That was the selling under the panic selling that we saw back January and February. We established a low at 225. End of June, remember, we had a lot of selling at the end of June. Also got some fear into the market. We hold 225. And now this time we actually broke below 225. So I think for now, in the very short term, I would be following FDX at about the 225 level in terms of resistance. And you can see earlier today, got up to 224.70 and backed off of it. And then I think also we have the low from back before the huge uptrend that we saw at the beginning of late 2017 into early 2018. And that's down at about just above the 210 area, maybe 212, 211, 212. I think this is a short-term range. If we can get back through 225 with the PPO falling, I think we want to watch the 20-day moving average, which did fail on the last test. So there are a couple things here to watch on FDX. I think that overall, we're definitely trending lower. I think that's pretty clear. We didn't break out above the January highs like many of the areas of the market did. So I have some concerns here. Volume trends certainly have turned a little bit more negative. So watch that 225 level. If we get through, I think that 20-day would be next. I'd be surprised if we just go right through that level.
All righty. What do you think of natural gas, UNG?
Yeah, I think that if I'm not mistaken, we were pulling back. Pulling back off the high. We got all the way up, and I remember taking a look at this recently. I think I talked about technically I struggle sometimes with the UNG. It doesn't always follow. But I think I was looking at it thinking we could go up and test this area, the January high. We did that, and at the top, look at that reversing bearish engulfing candle after putting in an intraday high that took out that prior. So when I look at this, this particular fund or any individual stock, when I see these breakouts, because this was the candle body high, we gapped above it. We should have continued higher, but we were overbought off of this huge move to the upside. And then we got that reversing candle. And sure enough, we are weak today. I think in the short term, we look pretty good here. But I think that to the downside, you've still got that rising 20-day moving average. So if I was looking at UNG as a trade, I'd be looking maybe down close to about 25.50 to 25.75 for entry. And I would only be looking maybe for about 4 or 5% move to get back up near that resistance level.
Okay, let's see here from the industrial sector, Northrop Grumman, NOC.
All right, NOC. Well, defense has been weak. Let's pull this one up on a relative chart because this, I think, will show, even though I think some defense started to pick up a little bit on a relative basis, right here, you can see we are still actually, this is NOC relative to its peers. But here you can see NOC picking up relative to the S&P and the defense stocks picking up relative to the S&P. But we are way off earlier highs. So we're starting to show some strength, but the longer term picture is not looking that great. So if I'm going to trust that short-term signal, I don't want to see breakdowns. We've already lost the rising 20-day moving average. That, I think, is a problem. And so the next level is going to be the big selling we saw in September on this uptrend. We did not close below 300. Today's low, we got down to 301. I'd keep a tight stop because if you break below 300, I don't really see any support until you get back down into maybe 285, 290 area. And again, you're talking about trading a group or a stock that is in a weak group relative to the S&P 500 throughout most of 2018. The long term, by the way, for defense stocks is pretty strong. It's one of the few areas of the market that tends to literally weather almost every kind of market condition. But the group has not been strong over the past few months. So until that picks up, I would keep a tight leash on stocks like Northrop Grumman.
All right, for our friends in Canada, we haven't had too many Canadian stocks requested, but we do today. RYTO, Royal Bank of Canada.
it's is RY.T. Yeah, I think it's
Yes, I'm sorry. Yes, .to.
Yeah. Well, this is a little bit of a character change here, at least in the short term. Well, I can't pull up that. But let me move to a let's just move to a daily chart, but I want to be able to see that recent high. So let's go back and look at a year. Okay, there's some problems here on the chart. The first problem is that we could not get through that prior resistance. So again, I think it's really important that you at least look back on a chart and see where major tops and bottoms occurred, because if that's where sellers were the last time, many times that's where you'll see them again. You can see that RY, Royal Bank, got up to 105 back at the end of August, failed, held the 20-day moving average, turned back up, tested it again, failed, and now lost the support, lost the moving averages, and I would say even lost a trend line from the lows that were established back earlier. So if we just kind of go along here, I know it's only connecting 2 points, and trend lines can be very dangerous when you're only connecting 2 points. But we did, I can't really see anything bullish here on this chart, looking at the breakdown in terms of the price, the moving averages. You can see the PPO's now gone negative again. I am a little bit concerned here in the near term. The failures at price resistance, followed by some breakdowns. I would avoid it personally.
All right. Well, let's look at specialty chemicals. I know we were talking materials earlier. Green Plains Renewable Energy. So it's GPRE.
Okay. Well, the breakout's pretty obvious, but we had a breakout 3 or 4 days ago, and look at the false, move back to the downside. And now we're breaking out with even heavier volume today. The problem I have with the stock is when we look back over the course of this last year and we annotate, I see a stock that really is going nowhere. Of course, in the market that we've had the past couple of weeks, that's probably a good thing. But the volatility has been pretty wild here in the near term. Volume has picked up. I think it's kind of searching for direction. There is no trend in play. You can look at the PPO up here and just see it's been hovering right around that center line now on the daily chart for the past 6 to 8 weeks. So I don't see really anything going on. I think if you're playing this as a breakout and the start of an uptrend, then you really shouldn't be going back down and breaking these moving averages to the downside. So I just think the volatility, I'm not seeing anything that is trending just yet. So I would pass on it. I do find it encouraging that we're seeing the kind of volume we are today. But I'd like to see it close maybe back above this gap resistance that we saw from back in late June. So until we get that, I would just expect maybe more of the same.
All right. This one's making a turnaround. What do you think of Micron? Interesting support level there.
Yeah, I mean, the whole group has just been really weak. I mean, really since the beginning of May, we're seeing a lot of the semis, the Microns, the Intels, Applied Materials, many of those in that area have really struggled. And I think this downtrend still remains in play. Notice we haven't been able to get through the 20-day moving average and hold it since the selling began at the beginning of September on heavy volume. So I'd continue to watch that first of all. But from a longer term perspective, I think we got some support coming in, maybe around 39. The most recent low was around 41. So maybe look for something in this area. But until we either hit that support area or can find a way to eventually make a breakout above this 20-day moving average, I would continue to pass. This is an area of the market that is struggling right now.
All right. What do you think of Molina Healthcare, MOH?
Well, the fact that it's just healthcare already makes me feel a little bit better about it. But yeah, it's had a negative divergence. It's possibly getting a nice reversing candle here on the 50-day moving average. I mean, if you're looking for an area of the market that's performed much better than the overall market, I think earlier when we were looking at, let me see which part of healthcare this is in. Is it the healthcare providers? Yes, it is. That's one of the areas that Bill was showing earlier that's been outperforming the S&P 500. And so you can see that in this chart, the group's been going higher. The stock has been doing pretty well. I'm not going to annotate this one, though. I want to go back to the daily chart here without all the relativity, because I just want to show you what I look at when I see these negative divergences emerge. So here you've got lower PPO, which I think is pretty obvious there, and higher prices. And even as we were reaching this last high here back in the middle part of September, you can see volume was just kind of average. So I think when I see that, I start thinking, okay, PPO centerline test, 50-day test, and that is about where we are right now. This reversing candle, if we do get this today, I think would be a very bullish sign off of a 50-day test. So I like this in a market that's hard to find stocks that I like right now. I think that Molina Healthcare looks pretty good.
All righty, and our final one will be Turtle Beach. It's the big outlier on that RRG, HEAR.
Yeah, it's the biggest gainer, or at least it was earlier, the biggest gainer on my strong earnings chart list. I saw it earlier and I looked at the chart. I like the gap up above the 20, but only if we finish there. So I'm going to shorten this so we can get a better look at what's going on here on this chart. Let's just take a look at the 6-month. And you can see all of these failures since we broke down really in third, fourth week of August. We have not been able to get through that 20-day moving average. Notice that when we were trending higher, we kept trending above the 20. And once we've broken down, we're mostly just trending below it. So I like the big volume coming in, that gap up above the 20. But I would like to see a strong finish and close above the 20 to get more excited here in the near term. So for me, it's really all about how we finish today. And so I would be watching this candle. And again, the reason I think that this candle is so big is because we've got such heavy volume today. So I pay attention when the volume is big if we get some kind of a technical development, and a breakout above the 20-day moving average would be just that. In the meantime, I think the recent lows, that's going to provide you now gap support. That's where we gapped up from yesterday's close right here to today's open. So I think that is your short-term, very short-term trading range. A breakdown below yesterday's close, which would be down at what, 1720. A close below that level would be bearish in my view, and a breakout and close above the 20 would be bullish.
All right. And that does complete the 10 and 10. I will get these symbols up in the Market Watchers live chart list. You're going to find that chart list with these charts with the annotations on, just go to the blogs tab and click on the Market Watchers live blog. And there you go. You'll find that link right at the top. Of course, it's always in the actual Market Watchers live recaps as well. All right, time for our final market update. Let us see what has been going on. Let's see if it's gotten any better out there. Not much. It does look like we did make an attempt, though, to get up into positive territory for the Dow and the S&P 500, but we saw a failure there, and it is heading back down. The NASDAQ did manage to make it into that positive territory, but only for a few minutes, about a half hour, as it is back down in the negative territory, down 10.37 points at this point. OEX also hit yesterday's close and is moving lower. Same for the 400. Russell 2000 did get up into that positive territory like the NASDAQ, but is now falling lower. The TSX, Canadian markets, are trading lower right now, mostly sideways, currently down 77.91. The Treasury yields are down today, currently reading 3.157%, near the lows today. A UUP, big gap down, but is consolidating sideways, still down almost 0.5%, reading 25.28. GLD, big gap up and is continuing to rally to the upside. The demise of the dollar today seems to be helping, but clearly we have a lot of buyers because we have a really nice uptrend, not consolidation like we're seeing on the dollar. TLT, gap up. It looks like it's trading at its intraday highs right now, 114.47, having a very good day. USO, oil is down, gap down, and is now at intraday lows, currently reading 15.04. Let's take a quick peek at the VIX and what is going on there. I wanted to point out that, again, we are still seeing VIX readings below the lower Bollinger Band on this inverted scale, meaning we have very oversold conditions as far as the VIX. I look at the VIX for oversold, overbought conditions based on where it is in the Bollinger Band. I do caveat this with the fact that they are expanding. These Bollinger Bands are expanding, and we do have high readings like we're getting right now. Can be dangerous, but I am still looking for a bounce. I was really looking for it today. We had these extreme readings on our breadth indicators here, the advanced minus declines, and huge downswing there. Those are very climactic readings, and typically those are going to tell you we are looking for a selling initiation, or we're looking for a selling exhaustion, or we're looking at a selling initiation. So I'm looking at this as an exhaustion. We've already had this deep move to the downside. Obviously, we're still not seeing it yet. I'll be very curious to see what these breadth readings are at the end of the day, and I will write about it if there's something interesting to look at. And that's all I have for our final market update. I'm going to pass it back to you, Tom.
Okay, along those same lines, I've got the Dow Jones Industrial Average chart up here, and I've got the VIX on the bottom. I just wanted to point out that back when we had this, if we break above 25 right in here, when you look back at the VIX in February when we had readings at this level, and you look at the distance between the highs and the lows during this period, I mean, it was outrageous. We had 7 consecutive days where the high low on the Dow was anywhere from 2 to 5%. From low to high, and now we take a look at what we're doing so far today, and we've got about a 460 point range, which is not nearly enough based on what we normally see when we get VIX readings up this high. So what I'm just saying is we could see a huge move this afternoon in one direction or the other. Obviously, it would be very bullish if that moves back to the upside, but if it's not, you want to be careful because at a high VIX reading, the market sells off extremely fast, and you could be 1 or 2 days off of catching the bottom right and be down a ton. And we saw that yesterday with huge drops down, NASDAQ losing 4%. So anyhow, just want to point that out. It is very dangerous right now as we head into the chart breakouts.
Yes,
Good
I
luck.
was a little concerned. I wasn't sure I'd be able to find any, but I actually did. So I'm going to share a few with you. The first one, I'm going to show you just some that I got earlier. I want these. Let's see, where's my? Yes, these are a few that I came up with that I wanted to share with you. I'm going to show you gold, but then we're going to look at a few of the miners. So I'm just going to go through this very quickly with you. But these were some of the interesting breakouts that I saw that were accompanied by nice looking PMOs. So we have a nice breakout here. This is a gold mining stock. I'm going to look at a few more. KL, and you can see we've got that breakout, very clean, very nice. PMO had a little bit of a fake out, but it is heading to the upside. We may see positive territory here soon. So I'm liking Kirkland Lake Gold. Limited brands. This was one of the most active, the biggest percent movers today. And certainly a big time breakout here with the big gap up. I like this breakout, and I'm going to go ahead and annotate just very quickly a declining tops trend line. And you can see that, not only did we break out above what we were looking at from the September tops, but now we're breaking out above a declining tops trend line. So we're breaking a declining trend, and you have the PMO turning up right above the signal line. I think that's very encouraging as well. Other one I have, Red Hat. And this one has a very encouraging breakout. The PMO is now turning up on this gap up. So we don't have a lot of history here on this particular PMO bottom because it is just happening today. But we are breaking out from a very steep declining trend here. And the only caveat I have right now is this is very, very important resistance here at 120. Notice that it hits these lows back in September, but more importantly, this gap that we see back here. Now we closed that gap, and that could mean a continued move down to test these lows back in September, but I like this breakout. I think the PMO is starting to get healthy. We need to see it break out above 120 though. I know it's already an 11% plus move, but I need to see just a little bit more. All right, gold today is certainly having a nice breakout. I wanted to be sure and show you GLD since we obviously don't have the closing numbers for dollar gold. Nice breakout, finally. Finally, we're starting to see a move on gold that we should have seen back from late August. And again, I know Greg was talking big on gold right there in mid-August for the setup. And, we did get a little bit of rally, but after that, it's just been consolidation sideways. And I love the fact we got that beautiful breakout. And you can see those two bottoms above the signal line. I think we might finally be seeing what we need to with gold. And notice that our discounts on Sprott Physical Gold Trust are still very high, meaning very bearish sentiment, which is bullish for gold. So I'm expecting this move to continue. And when I was doing my searches to see what I might like to look at, I noticed that the gold miners were really perking up. And the reason I know that is I went down to one of our predefined scans and I looked at, let's see, moving above the Bollinger Band, I think. No, maybe it was new 52-week highs. Of course, now I'm going to not be able to find exactly what it was, but I did use one of these. Yes, there we go. And notice that gold miners were precious metals and gold miners. We were seeing a lot of these in that particular scan where we had the improving, the strong volume gainers. So I decided I'd do a quick scan on the gold mining industry using my focused PMO scan. So I just changed the group. I made sure that the close was below 5. I did only look at those that were rising today. I did not make it, it had to be rising for 3 days, only today. And so that way I could get a good group. I found 4 that came up through that. And looking at it in candle glance, see if we can get that back in here. Alrighty. Here we go. So I took a peek at these. I really liked what was going on with the PMO, and we certainly are seeing breakouts right now in the gold miners. This one, I like these, rounded bottoms here. You could look at this as a double bottom formation. It already has fulfilled itself by hitting that $12 range. But I think we could get higher. Notice we're breaking above the 200-day EMA. I'll just show you these and then I'm going to pass it back to Tom. But another nice breakout you can see on Anglo Gold. Rand Gold, I think has a beautiful breakout as well. Caution, I would say, would be overbought PMO. But we're finally getting these breakouts that we've been waiting for on gold and the gold miners for that matter. Nice flag, big breakout here. Again, only thing I would caution about is a overbought PMO, although we can see that we've gotten down to -6, which means we could get up to +6. That's all I had for my chart breakouts. What'd you have?
Okay, well, as you might expect, some of the breakouts are, as you'll see, some of these have been failed breakouts that I think you have to be really careful. I think they're pretty important to talk about and point out as well. But many of them are in the energy and utilities area where we've seen a little bit of outperformance. Of course, energy the last 2 days has pulled back. But here, this is AM. This is Antero Midstream Partners LP. We did recently have a big push up earlier this week, trying to get through this 34 level. Today, we got as high as 34.53, and we're back down at 33.93. I don't like to see tails above the prior highs and then failures. So if we close near the low today, this would be what I would consider maybe a failed short-term breakout. But volume trends look good, and so any kind of a pullback here would be interesting on AM. Murphy Oil, MUR. This is one that is kind of threatening a breakout today. Even I know energy was down earlier, But here we did open up beneath the breakout level, which was, I use candle bodies, not tails. But here the high candle body was just above 35. We opened today at 34.80, traded as high as 36.53 on very heavy volume. Do not want to fail on this on the close. So this is one that I'd keep an eye on, but definitely, at least on an intraday basis, looking pretty good. Then we have American States Water Company Utility. Look at yesterday's candle. Again, look at all the tops coming across here at 61.50. We got up to 62.50 intraday, had increasing volume. This is not a heavy volume stock, by the way, but we failed, and now we're pulling back. We've got bottoms across the last few months down around 58, 58 and a quarter. This could simply be falling back into this range, but this I just wanted to point out because yesterday we had a chart breakout. It failed, and a lot of times this is what happens. CHL, here we had a chart breakout, but yesterday, big black candle, shooting star, you gap up, you trade up intraday, you close at the low, and check out the negative divergence here. Higher prices, lower PPO, black candle, black shooting star candle, and it's pulling back off of that. Going to need to watch that 20-day here. But again, it is a breakout stock. CMS Energy, look at yesterday's candle. Again, I don't make this stuff up. Broke out above 51, taking out previous highs, and then right back down today. Failure. Whoops, not the right symbol there. DTE is next. Another one in energy, and once again, look at the reversal. Had the breakout intraday, closed at the low of the day, and now we're back down today, another 1.4%. GBX. Uh-oh. Try a different way. No.
Well, that's interesting.
Yeah. Every once in a while I have internet problems. I do have a hurricane going through here, by the way. So.
Yeah, I was going to say, I think you do have a little bit of an excuse for that.
Yeah, keep trying.
Tell you what, I'll put it on mine for you.
Yeah, why don't you pull it up and see if you can pull up GBX. I only have a handful here left. We can go through these pretty quickly.
And I do have, we can put in your, Uh-oh,
maybe it's a Safari thing.
All right, let me try Chrome.
On the fly. We're doing this on the fly.
You know, hey, live show. No, we must be having a bit of a problem right now.
All right. Well, we can just kind of talk about the market overall. And as far as, you know, the market, and by the way, the other stocks, I'll just go through and tell you what other stocks I was going to look at. GBX, McCormick's, MKC, that's the spice company. It's in the consumer staples area. OGE, which is, I believe that one was energy, if I'm not mistaken. SERV, I wanted to show SERV. I think that's ServiceMaster. That's in the consumer discretionary space. And I looked and I couldn't even believe that there was a consumer discretionary stock that was breaking out. But SERV was breaking to new highs, and no, still nothing. I wouldn't worry about it. We're getting close here to the end. But ServiceMaster is actually breaking out in the consumer discretionary space. And if you've been watching the sectors, I mean, consumer discretionary maybe has been treated a little bit better than technology, but not by much. I mean, it has not been a very good, certainly hasn't been a very good last few weeks for consumer discretionary. And then the last two I had, telephone, data systems, TDS, and Verizon, VZ, which has been performing really well of late as well. So anyhow, did you get something there?
No, but I will say that we did have a question that we could kick around here. The market shows the ramifications of Fed policy interest rates. That's the statement. I don't know if I agree. Is gold the place to be? I know how much you love gold. Are you ready to put your hat in the ring as far as metals?
Well, I follow what the technicals are telling me. And I mean, when Arthur was on here the other day, he mentioned that 115 range. You know, he wanted to see that breakout above 115. Listen, I'll follow the technicals. If technicals say breakout, then I say you play the breakout. And gold today is breaking out. If it holds. Now, we've just seen, I just showed a bunch of charts where we had breakouts yesterday or the day before, intraday, and then they come back down. You leave a long tail above resistance, and then back down we go. So this is what I would say about gold. It has been an underperformer versus the S&P 500 almost every week since 2011. We have had periods where we've had a little bit of a break, maybe for, I think there was one period back in 2016, I think, for 6 months or so, where it outperformed the S&P. But you have a long-term underperformer. And so if I'm playing a breakout in a long-term underperformer, I do not want to see anything that looks like a false breakout. So I would just simply, I don't have a problem trading gold. I think when you get a short-term breakout like we're getting today, I think that's fine. But I would have a very tight stop. If this thing reversed today and closed back below 115, 114.75 or something like that, closed back near the low of the day and left a long tail above the recent resistance, I'd be out. That's just me. Because again, you're trying to catch a bottom in an area of the market that's been an underperformer for a long period of time. And it's very good, very rewarding if you're right. But if you're wrong, you can simply fall into that trap and then just follow it down again. So just be careful. That'd be my words.
Yep. Yeah, I think that, it is considered sort of a safe haven at times. But it looks like you have access now. Did you want to show that SERV chart real quick?
Sure. Let me see if I can get it up on my screen first. Nope, I'm not getting it.
Oh, okay.
You can pull it up, though, if you can get it.
Yep, this is actually SERV.
Yeah, SERV. No,
Oh.
SERV.
I'm actually not controlling this. This is from up on high. They're getting service here, so.
Okay, so SERV, I mean, there you go. I mean, this is in the consumer discretionary space, and I haven't seen too many charts look that good in consumer discretionary in October, I can promise you. So there's clearly a breakout. The rising 20-day is something you might want to watch as we go forward. And the recent breakout around $42, that would be a pretty good support area as well.
Mm-hmm. Excellent.
Yeah, so that is
another day. Hopefully the markets are going to turn around tomorrow. I mean, I'm still waiting for it. I'll be, like I said, I'm going to be really interested to see what the breadth readings are at the end of the day, because I think they will tell us some information we need to know. And so I will likely be writing about that breadth chart I showed you earlier with the VIX this afternoon. Almost a guarantee, I can tell you.
I would also just throw out there with the Dow, when we were looking at the Dow at 1 o'clock yesterday, it wasn't that bad. And then as we got into the afternoon hours and the selling kicked in, the panic picked up again. I'm looking at something kind of similar to what we saw yesterday at this point. I'm not saying the market's going to sell off, 500 points a Dow in the second half of the day, but I think it is possible. As I pointed out earlier, when you get VIX readings up in this area, it is not unusual to have 800-900 point swings, even 1,000 point swing in the Dow from high to low. And you just have to be careful when a VIX is high. Make sure you keep your stops in play, because if the market rolls against you and starts moving lower, we know how fast, we saw yesterday how fast things sell off. So just make sure you keep your stops in play. Normally, this kind of panic doesn't just turn, with a kind of a low volatility kind of a day. Normally it takes panic and a huge reversal, but we'll see.
Yep, I'm going to be watching.
Yep, it'll be an interesting close today for sure. There's your upcoming schedule. It's going to be interesting to have Mary Ellen on tomorrow. There's a lot of what's not.
I have to say you're right about that.
No doubt. But anyway, thanks to everybody for stopping by today. We'll try to keep you posted on what's going on in the market and try and help you best we can. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everyone. I think the skies are clearing here in South Carolina. We'll see you back tomorrow. Happy trading.